Thinking about buying a home? Here's something most people don't realize until it's too late. Your roof might kill your loan. Yes, you heard that. Lenders and insurance companies are cracking down hard on roof age and the coverage of the policies that they provide, and it's already impacting closings. So why am I talking about this now? I've been seeing more and more files hit snags because of insurance conditions tied to the roof. In some parts of the hurricane belt, big lenders like UWM have flat out refused to fund loans if the roof is over 15 years old and the insurance policy doesn't cover replacement costs. Starting in 2026, appraisers will actually be required to report the remaining economic life of the roof. That's going to bring even more scrutiny to this. So what is going on? We all know insurance companies aren't exactly known for finding ways to maximize payouts. So here's where the fine print matters on the policies. Replacement cost coverage means if your roof is damaged, the policy pays to replace it with new material at today's prices. That's a critical thing to remember. Actual cash value, or ACV, means the payout is reduced for depreciation, basically what your roof is worth after 15 to 20 years of wear and tear. The difference can be tens of thousands of dollars in policy payout. That's why lenders don't like ACV policies on older roofs. If a storm rips shingles off and the payout is pennies on the dollar, the home's value is not protected and that loan is at risk. That's why you'll see conditions coming back on the loan saying provide a new or updated policy reflecting replacement cost coverage, which usually means higher premiums depending on how close we are on debt to income ratios. In some cases, that can kill your loan application. So what does this mean if you're buying a home? Ask specifically about roof age during the offer and negotiation process. I see listings all the time where they state the roof is newer. Make sure you get those documents to prove this. Get your insurance quotes early. Don't wait until halfway through a contract to get coverage. Find out if the policy will cover replacement cost or if it defaults to actual cash value once the roof hits a certain age. As well as, again, make sure you get any documentation you can from the seller if the roof has been maintained or replaced, and get that to your insurance agent. Now, if actual replacement value is needed, budget for higher premiums. Insurers are raising rates when they agree to replacement coverage on older roofs. Now, this isn't happening in every market yet, but I suspect it's going to be. I had a chat with a neighbor about this just recently as I saw he was getting his roof replaced. His homeowner's insurance policy was going to skyrocket due to the age of the roof. Fortunately, he had already planned on replacing the roof next year anyway, so he simply did it this year to avoid the problem. Now, I'd love to hear from my insurance friends on this. I'm just talking about what I'm seeing on my side of things, the lender perspective, and definitely would like to hear from an insurance agent's perspective. What are you seeing out there? Are there certain carriers getting stricter? Are there workarounds buyers should know about? Drop your perspective in the comment. Leave any tips or advice you have. At the end of the day, it's not just about the house, it's about whether the roof over your head keeps the loan together. Stay proactive, ask the right questions, and make sure you've got the right team in place before you buy. If you want to know specifics, getting a loan yourself, feel free to reach out. I've got all the programs. I'm licensed in Arizona, Oregon, and Washington. Talk to you soon. Take care.